Thank you, sir. Good evening, students. Welcome back to the session on value of supply. So yesterday we were discussing on time of supply. You were all given through the questions, and based on the questions what Shefali madam was asking day before yesterday, you could understand the topic of time of supply. Excellent. Very good that time of supply you're able to understand. Once time of supply you're able to understand, then value of supply should be easier for you, because value of supply is only a walkthrough. Shouldn't matter much like what was discussed in the initial sessions. This is very important for you that in value of supply we have the section. Okay, one side for every act, like that. As a matter of, for every topic you'll see that there is section and there is rules which is there for it. So most of the provisions what we are reading through is section along with the relevant rules itself. But in valuation you have valuation section and the valuation rules. So only if some instances trigger, then we go to the valuation rules, and otherwise the section applies. So for you at the inter level you have only section, which is the valuation section. Section 15 is only applicable to you. The rules which are relevant to the valuation are not applicable to you. So any reference to rules, you don't have to read it. And the rules, since it is not there, then the more intricacies in valuation is not there for you. So we will have to only concentrate on the section. Okay, so that's a good thing that if you would have gone through the exclusions, the study component which was given to you and which was discussed by Shefali ma'am, that what is relevant at inter level is only the section on valuation, that what should be the value we should use for calculating the GST. The rules which is there is not relevant for you at the inter level. So if there is something which is left out in time of supply, that also we can discuss, and value of supply, both, since both of them is one chapter itself and split into two, time of supply and value of supply. So if there's any queries on time of supply also can be asked in this session. Okay, Rekha Kumari, your question is, in case of reverse charge mechanism, the time of supply I mentioned 30 days and 60 days. Yes, it is 30 days and 60 days, but the trigger happens from the 31st day and the 61st day. So what I had mentioned is what is there in the act. That and the act, it is 30 days. So for calculation, you will use the 31st day and 61st day. So when there is a theoretical question, you cannot mention 31st day and 61st day. You will have to mention whichever is earlier after the 30 days. Right, after the 30 days within days of raising the invoice, 30 days on receipt of invoice, 60 days on receiving the invoice in case of reverse charge. So on receiving the invoice means that day is excluded. So for calculation purposes, you will do 31st day and 61st day. For theoretical purposes, you will write what is there in the section. You cannot change that. Correct? That's the reason in my slides, you'll see it is 30 days and 60 days, which means that is the invoice date has to be left. That's the calculation portion. The calculation portion will have to take one extra day. Great. Sir, in supply of services, please explain time of supply under forward charge. Okay. In time of supply, what is the time of supply under forward charge? Okay. What is the doubt here? Okay, so in terms of services, yeah, in terms of service, the time of supply for services will be where the invoice is issued within time, which is 30 days from the completion of service. If the invoice is issued within 30 days from the date of provision of service, right? Then the time of supply is the actual issue of invoice or receipt of payment, whichever is earlier. But if the invoice is issued late, if the invoice is issued after this 30 days or 45 days, we know 45 days applies to whom in terms of telecommunication company, in terms of special category of persons, right? Who are those special category of persons? That is insurance company, banking company, and financial institution. So if these three institutions are there, for them it is 45 days. So if the invoice is issued after 30 days, then the time of supply goes back to receipt of payment or provision of service, whichever is earlier. Okay. So that is the time of supply for of service component. Okay, clear, Pandava? You had this query on this. Is there any specific query you have on this? Please ask your specific query. Can you please explain advanced treatment for one more time? Okay, advanced treatment, you can receive advance for whatever you make a supply. Now, supply can be of two types, supply of goods or supply of services. Now, when I make a supply of goods, okay, the provision said that, the section said that GST has to be paid on receipt of advance or raising an invoice, whichever is earlier. Okay, the section said that whichever is earlier has to be paid. But then there was a notification which was issued, and this notification said that you don't have to pay GST on receipt of advance, but you have to pay only when you raise an invoice of this is only applicable for goods. So when I raise any invoice for goods, when I sell something, okay, when I sell some product, when I manufacture and sell, or I'm a trader. So for a manufacturer or trader, when they sell any goods, okay, then the criteria is the advance receipt, on that they don't have to pay any GST. They have to pay GST only when they raise the invoice. So once they raise the invoice, on the GST has to be paid. Now come to the flip side of supply of service. So when there is a service invoice which has been raised, that exception, the notification which gave a exemption of paying of GST on advance, that doesn't apply to services because that applies only to goods. So once we understood with respect to goods, now when we come to services, we have to pay GST on receipt of advance or raising of invoice, whichever is earlier. Okay. So once I raise an invoice, then I have to pay GST on that. But if I received the advance in before raising invoice, so before provision of service, if I've raised the invoice, then on the advance amount I have to pay GST. So if I've received, I have a contract for say 1 lakh rupees. Of that I've said 40% you have to pay me advance. So 40% he's paid me advance, right? On 40% I have to pay GST because I've received the money first. Then if I've raised the invoice on time, okay, then the 30 days will come. So I've raised the invoice on time. For how much will I raise the invoice? I have provided my services of 1 lakh. So I will raise the invoice of 1 lakh. Fine. Will I mention GST on that fully? Yes, I will mention GST fully because on 1 lakh, I have to mention the full GST. Once I mention the GST, should I pay the whole 1 lakh? On the 1 lakh, say tax is 18%, which is 18,000. Should I pay the whole 18,000 to the government? No, because on the advance of 40,000, I've already paid the taxes to the government. So whatever is the taxes on 40,000, which has already been paid, that much I will reduce and pay balance to the government. Okay, so that's how the advance mechanism works. Time, okay. Okay, next question is time of supply for forward charge mechanism for goods not delivered. What do you mean by goods not delivered? If the goods are delivered, only then you raise the invoice. If the goods are not delivered, then you don't raise the invoice. So if goods are not delivered, what will be the status of the goods? So there has to be a complete transaction, Deepak. Your question is, what is the time of supply for forward charge mechanism for goods not delivered? If the goods are not delivered, it means the supply is not concluded. If it is moved out of your factory and if it is not delivered, once it is moved out of your factory, you have to raise an invoice. right? If it does not deliver for whatever reasons, then you'll have to raise a credit note to reverse that. You cannot cancel that invoice, you'll have to raise a credit note. How will we know who is covered under reverse charge, Rekha? You will have to go to reverse charge provision, which is our discussion which we had in the topic of charging. When in the discussion on charge, we had discussed who is covered under reverse charge. For different category of reverse charge mechanism, different people are required. It is not one person, or not one category of people who will pay reverse charge. Reverse charge is paid depending on the services differently by different people. In some cases, it is registered person. Some cases, it is business entity. Okay, so some cases it is company only. So in such cases, you'll have to see, especially in terms of GTA services and security services and hiring of car with fuel. So in that cases, it is little different. So you just see the video and see the slides what I've shared, you will understand that. What is the difference between time of supply and due date of payment? Why Act specifically specifies both differently? Yes, this is a very basic question, but you need to understand what is the difference between time of supply and due date of payment. Okay, now we had seen that slide in time of supply. I will go through that slide again. Yeah, this was the basic slide which we were discussing. There are various events. Okay, these are the various events which are occurring in any transaction. PO is raised, goods are shipped, or invoice is raised and payment is made. So time of supply said that based on these 4 instances, this instance is not relevant because agreement for supply is made. That is only an agreement. On that, the time of supply does not trigger. Goods are shipped. That is one instance. Okay, our invoice is raised, our payment is made. Whichever is the earliest of the 3, he said that is the time of supply for goods, right? So invoice should be raised before the goods are shipped. So before the goods are shipped, the invoice is raised. In my case, so 11th April 2021 is the date when I raise the invoice. Okay, so this becomes the time of supply. So this 11th April is the time of supply, right? Now, for every time of supply, can I keep paying taxes? I cannot make paying taxes for every time of supply because time of supply will be in the morning, then in the afternoon, then in the evening, then it will be accumulated for a day. Like that, every day if I keep paying, that will not practically work out. So time of supply is being defined saying that this is the time of supply so that there is no confusion when I should pay taxes, which point triggers the taxes. So time of supply is defined saying that this is the trigger point for you to pay the taxes. Once this trigger point is attracted, you know that the levy is attracted and you have to pay taxes. But for convenience purposes, the due date is defined. Due date of payment means you'll have a tax period. Generally, a month is a tax period. So that whatever transactions you do in a month, all those transactions are triggered and then you make the payment on the due date. So whatever taxes are triggered for the month of January, the due date of payment of whatever GST you have collected for which time of supply has occurred, wherein time of supply is completed. For that, you will pay the taxes on the due date of payment. The due date of payment is subsequent month's 20th. Okay, 20th of the subsequent will be the due date of payment. So time of supply is the point which triggers and due date of payment is the date when you make the payment of the taxes to the government. So that's why there is a difference in time of supply and due date of payment. "45 days is what? 45 days we have discussed is for banking companies, insurance company, including NBFC, and one more category. So 3 category of people that it is 45 days. Can you explain time of supply in residual cases? Time of supply, we'll go for time of supply in case of residual cases. What happens? Yeah, this is the thing. Date of recording the transactions, right? Time of supply, we know the time of supply under forward charge, time of supply under where invoice is not issued within time, then time of supply in terms of reverse charge. When all of these transactions are occurring and all of these are, there is a time which is known, then we know that what is the time of supply. But there could be some instances when the time of supply is not known, okay, or the actual date is hidden, or though mostly it will come in cases where the transaction is not reported, it is kept out of the books. Okay, then and the department has found out during assessment or during inspection saying that there is some transaction which has occurred. Now I don't know the specific events, like we had said that raising of invoice, receipt of payment, okay, or within 30 days when the service is provided or when the goods are delivered, but those instances are not captured. But government, the authorities know that the receiver has received it. Now the supplier is not providing any of these documents. So in that case, they know that the transaction has occurred, but the events are not captured. So then will it be just left out like that? No, it cannot be left out like that. That's the reason the residual case that comes in, wherein all the above do not work for a situation, then the time of supply will be where a periodic return is filed. When the periodic return is filed, wherein if he's filing quarterly returns, then that's the periodic return. Or if the person is filing monthly return, that's the periodic return. Then when the periodic return is to be filed, due date of such return. Okay, due date of such return, or in any other case where he's not registered only, then what return will he file? So in that case, if he's not filing a return also, then the date on which tax is to be paid. So when tax is to be paid, tax we have discussed. In case of payment of taxes, you'll get to know that whether a person is registered, then he has to pay the taxes within a stipulated date, that is 20th, right? So if his return is also quarterly, but the due date will be the same for everybody. Even if he's not registered, he has to pay by that date. So if he's not registered, right, and the authority finds that he is liable to pay, then they will tell him to pay by that due date. Why it is important to capture the interest component, saying that if he's not paid the taxes, then from which day he has to pay the interest, from which date. Not from the date of time of supply, it be from the date of due date of payment of tax. Okay, that's where the residual provision comes into picture. So to recapitulate, residual provision comes when those events which triggers the time of supply are not known. Then when the person is filing his periodic return, that will be the due date of such return, or when he is not filing returns also, then the date on which tax is to be paid. Okay. Okay, should we attempt first income tax at GST? There is no such compulsion that you need to first attend this or this. Whichever you're comfortable can be attempted. Yeah, does the tax to be paid to the government or filing a return both are on the same day? Yeah, practically both are same date now. But theoretically, in the sections, there are two provisions. One provision is for due date of filing and one is due date of payment. There are two dates, theoretically different dates, but practically both are on the same date today. So without payment, we cannot file the returns. That's the reason payment of taxes and filing of returns both are interconnected. Please explain composition scheme. Composition scheme we had covered long back in the charge section. Composition scheme is a scheme wherein instead of paying the regular taxes of 18%, 12% and 28% and then claiming input tax credit, the scheme is given in such a way that a supplier who supplies the goods and who is a small supplier, which is a turnover, who's having a turnover up to 1.5 crores, he can opt for this composition scheme and pay one small rate. Once he pays this smaller rate of 1%, okay, the rate is as low as 1%. Once he pays this 5%, he should not claim the credit, and he's relieved of all this claiming of input tax credit and things. So a composition scheme is a special scheme which is given wherein he can go for this and pay lower taxes than what he's regularly going to pay. Sir, if advance payment is not relevant, then why is it written the date of receipt of payment in case of supply of goods? Because it is there in the act, that's the way it is written, but that notification is come after the act is there. That's the reason both have to be mentioned. Nidhi Parik, I'll answer your question in the break time. If a person is not registered, then how to pay taxes to the government? If the person is not registered, then the authority will give a temporary number through which he can pay and then take the registration. Fine. So now let's get into the actual topic of time of supply now. Time of supply we have discussed. Now value of supply. Time of supply has been discussed, right? So once we are clear now, we can get into value of supply. Okay. Now, what is value of supply? We know that GST is levied on supply. Under section, we have seen that GST is levied on supply. Levied on what and when? When it is levied is decided in the time of supply. On what it is levied is decided in this valuation chapter, which says that GST is levied under section 9 on value, which is determined under section 15 and at the specified rates. Okay. Now decided on a value and at specified rates. Now duty, on what duty is paid, whether it is paid on the value or is the fixed duty. So there are two types of duties which is levied, which is one is called as ad valorem and one is called as specific duty levy. One is called as ad valorem and one more levy is called as specific duty levy. Now what is ad valorem? Ad valorem means the GST is paid at a fixed percentage on the value of the goods, on the value of the transaction, which is value of the goods or value of the supply. Okay, so GST is levied on ad valorem basis, means any taxes, most of the taxes are levied on ad valorem, saying that it is a percentage of the value of transaction. Okay, it is a percentage on the value of the transaction. So when I do a excise manufacture, I am charging and paying duty on the value of the manufactured goods. When I'm doing a service tax, earlier when I used to pay service tax, I used to pay service tax on the service value of the transaction. Similarly, when I'm paying GST, I'm paying GST on the value of the transaction. That's why it's called as ad valorem. Corresponding opposite to ad valorem, there is specific duty, wherein I pay specific duty and not a percentage of the value. Okay, the example could be in case of cigarettes, saying that the excise duty on cigarette was levied on the length of the cigarette. Okay, it was levied at say 5 rupees per stick. Okay, so that was fixed rate on the stick. That is an example of specific duty. Another example of specific duty is on steel plates, steel pattas they used to call. On that also, it was levied not on the basis of the value. It was levied on the basis of the quantity, saying that 5 kgs. On 5 kg, 500 rupees is the rate of the excise duty what you'll pay. Okay, so it was levied not on value of the goods. It was levied at a specific percentage. It was levied of a specific parameter which was not based on value. Okay, so what happens in that case is those goods were of special importance. So steel, cigarettes were levied on a specified based on per production specific duty on the production basis, not on the basis of the value. So that was the example of specific duty. Now we have another example of ad valorem, wherein the taxes is levied on the value of the goods. Right? In GST also we are following this ad valorem, wherein GST is paid as a percentage on the value. Now that value is determined under section 15. So section 15 is the valuation section, which says what is the value you will use, when you will use the value, and when you will reject the value. Before getting into valuation, we can get into important definition which are relevant for us in this chapter. First is agent. Okay, because goods either supplied through the principal or through the agent has to be decided. That's the reason the definition of agent is relevant here. Who is an agent? Agent means a factor, a broker, or a commission agent, or a arhatya, or a del credar agent, or an auctioneer, or a mercantile agent. Agent is the agent. Then why so many terms have been given? Because agent is called differently by different names in different places. It is all the same. It is, but we have to not confuse the agent from the term agent which we use generally. Agent generally means what? A person who does something on behalf of another, okay, and he gets some remuneration for his service. Like there is a seller who is saying that I want to sell my goods. I can either go to him or he can come to me. The relationship could be any case, either he approaches or I approach. So basically, I am a person who will go to a seller and tell that I'll find you a buyer. That is what you are there for, right? You want to sell your goods, and I'm there as my agent. I will help you to find out customers. What commission will you give me, or what will be the remuneration you'll give me, right? So he is an agent who is connecting two people. Now this agent could be called generally as an agent, or he could be called by various terms. He could be called as a factor, but in some industries it is called as factor. In some cases it's called a commission agent. Some cases it's called a broker. Who is a arhatya? Arhatya also, there are two types. One is called as kacha arhatya and pakka arhatya. Kacha arhatya is one who will find out the customer, okay, but he's not responsible for the goods. Okay, but a pakka arhatya is a person who is responsible for the goods and is also responsible to the buyer to ensure that to the seller and to ensure that the buyer will pay his consideration. Okay, so pakka arhatya will also ensure that apart from selling the goods on your behalf, I will also ensure that the buyer will pay you the consideration. So arhatya is also a person who connects the seller with the buyer. Okay, a del credar agent means the agent who takes the responsibility similar to arhatya itself, wherein he will ensure that if the customer doesn't pay you, I will pay you. Don't worry with me. So that's a del credar agent who takes extra commission. An auctioneer, we know that, who auctions on behalf of the principal, saying that they have to sell some old items, or a banking company wants to sell some car, then they appoint an auctioneer. So auctioneer is not taking responsibility of the good, he's only facilitating a place where all the goods can come in picture, and they will auction it, and they'll invite a lot of buyers. Okay, so all of this we see that a mercantile agent is an agent who merchandises the goods. So in all of these cases we are seeing that all the nature of character is same, wherein they are not buying the goods from the seller, they are only using the goods of the seller to market their services and sell it to the buyer. They are linking the seller and the buyer, right? So these are the agents who have been given different names. I've used the acronym for this ABCDFM, which means A is for auctioneer and arhatya, B is for broker, C is for commission agent, D is for del credar agent, ABCDFM. F stands for factor and M stands for mercantile agent. Okay. So ABCDFM is a smaller term to use whenever there is a definition on who is an agent. So once I know there is these agents who are there, these various names which are there, agent means these people who carries on business of supply of goods or services on behalf of another. So if they themselves buy it, they will not be called as an agent. So when an agent sees that, okay, there is a customer who will come, but the seller will sell off his goods, so I will buy it and keep it with me and then sell to the buyer. So will he be an agent for that transactions? No, because he's not selling that goods on behalf of another. He's bought the goods, it is under his custody, and he's selling it to the buyer. So it is not, he will not be called as an agent for that transaction. He's buying it and selling it. But an agent is generally a person who buys these goods, who carries on business of supply of goods or services. There could be an agent for goods, or there could be an agent for services also, wherein some person is providing some services, but is not able to find the buyer. So agent will find it out and buy it. He'll tell that, okay, I will provide you this person who will sell it, who will provide you this service. So just a linked question, not in this relevant for the topic or not relevant to the subject. Is it possible that a chartered accountant is not able to provide auditing services or say consultancy services, and he finds there will be an agent who comes and okay, by the time you answer, I'll take up some questions. Does real estate also come under agent? Real estate agents who do agency business of finding out a house, finding out a shop, finding out a commercial space, and they charge some commissions, they charge some brokerage, they are also covered under agent. Yes. If a retailer sold the goods in loss, then he can take more credit of GST. Yes, he can take credit of GST. He can take more credit, yes, because he's brought it at a higher value and sold it at a lesser value. He will get more credit because GST is not levied on what profit you make or whether you have sold something on profit, you have sold with margin or without margin. If you bought something at a higher price and sold at a lower price, then in the valuation rules we'll read through that yes, if he sold it to an unrelated person, then he can claim credit of whatever he's purchased for. No worries there. Okay, there is a problem with the internet. I just connected with the LAN now. Now I don't think the internet. Okay, so tell me, I was asking this question that agency, we said yes, agent is there. Agent, why is it relevant? Because agent who acts on behalf of the supplier, okay, he is that case. What is the relevance? That either I sell it or my agent sells it, it is my sale because agent is sold on my behalf, right? But we have seen on behalf of, but who sells on behalf of another? That's the reason it is important. My question was, what happens in terms of agent or a commission agent in a chartered accountant services? Is it permitted? Can I take the services of an agent? What is the difference between Aratia, Delcredor agent and Mercantile agent? All are used differently in different contexts, but they are all agents itself. I don't think there is much differences in terms of their functions. There are only minute differences in which industry they use, but they're all same itself. The agent has to raise invoice on his name. The agent has to raise invoice on his name for his commission, but not for supply of goods. So when an agent, I've appointed an agent, okay, and he sells something goods, he sells some goods. If he's selling those goods on my behalf, okay, then he will raise an invoice on my behalf. He will not raise a thing to the customer. I will raise to the customer. It will only be routed through him. Okay. I've not got the questions yet on whether a CA can engage a commission agent. Yes. Few people are answering. I need more answers. Why can't we employ an agent? We also want our businesses to grow. Can we engage? Yeah, they started getting answers now. Most of them are giving correct answers. That says we cannot engage an agent because there is something called as a code of ethics which restricts you from engaging any person from soliciting your work or an agent who will get your work. You cannot pay any commission to any person to get any services of your professional nature. Why? Because you are a professional, you cannot solicit your work through another person. So there is a clear restriction saying that you cannot engage the services of an agent. So whenever you do practice, be very careful because there'll be many people who will approach you saying that I'll get your business, you're just starting your business, okay, and you just pay me some commission, I will get you a bigger client, that's how you will grow. There'll be so many people who will just try to give you wrong suggestions. Don't ever do that. At the cost of your CA certificate, you'll be doing it. So be very careful. Don't get into prey of such people. Correct. An agent does not have a CA certificate, so he cannot get it. Even if it is through another chartered accountant also, he can refer the work to you, but he cannot take any commission for that. So once, if I get work and if I have excess work, can I give that work to another chartered accountant? Yeah, that is permitted, wherein cross exchange of work between the professional fraternity, one from one chartered accountant to another is permitted. But what is not permitted is giving as a commission to anybody. Okay, you cannot give commission to anyone. Okay, so we understood what is the meaning of an agent. Now, what is consideration? You've seen this definition coming now here and again. So understand this definition also very important. What is consideration? Consideration is payment in money or otherwise for the supply. Okay, payment in money or otherwise for the supply. What is the consideration? Consideration is payment in money or otherwise for the supply. So consideration could be in money terms or it could be in monetary terms also, paid by the recipient or any other person. So consideration can be paid by the recipient or it could be paid by any other person. And the monetary value of any act or forbearance for the supply is also a consideration. So when I do sell something and I get something in return, that is a consideration. Or if I get something for not doing anything, okay, wherein I am a professional, I am engaged in a professional services firm. I worked over there for 5 years. Then after 5 years, I resign. Then the company will give me a consideration saying that you don't do this service for 6 months. So monetary value for any act or forbearance for the supply. So for doing any act or not doing an act, saying that you should not do it, for that also I'm getting consideration. I'm getting some money. That is also a consideration. And this is also supply. So when we read the definition of supply, doing an act or not doing an act was also supply. Okay, because the forbearance of an act, tolerance of an act, that is also a supply. So not doing anything and getting some money for that, that is also a consideration by the recipient. The consideration could be paid by the recipient or any other person, excluding subsidy given by the central government or the state government. So subsidy given by the central government and state government, central government or state government is not a consideration. Okay. Now deposit to be considered as payment. A deposit generally is not a consideration, but deposit will be treated as a payment only in one instance, when the supplier applies such deposit as consideration for the supply. When the supplier has treated the deposit as a consideration for the said supply, then it will be treated as a consideration, not otherwise. Okay, clear with the definition of consideration? Now we'll get into the next definition of money. What is the definition of money? Why money definition is important? Because transaction in money and securities are outside the scope of goods, outside the scope of services. So they are outside the scope of GST. So what all transactions are included in money? Indian legal tender, your all currency, coins, currency notes is money. Foreign currency is also money. Check is also treated as money because it is equivalent to money. Promissory notes, bills of exchange, letter of credit you use in your export transactions and import transactions, draft, pay orders, traveler's check, money order, postal or electronic remittance, or any other instrument which is recognized by RBI. What is recognized by RBI? All these payment gateways, what we have, we make payments through them. That is also a transaction in money. So they are also recognized by the RBI. They are also money. When used as a consideration, all of these things, when used as a consideration to settle an obligation or exchange with Indian legal tender of another denomination. When it is used as a consideration, when these terms like the check, when check is used as a consideration to settle an obligation, where it is used as a consideration to settle an obligation or exchange with Indian legal tender of another denomination. So when I use this as a consideration to pay somebody, or when I use this to exchange, when I give the Indian currencies of 100 rupees and I get 100 rupees in terms of 10 rupees of 10 notes each, that is the exchange of money. Okay, that is the so when these money, when is used as a consideration to settle an obligation or exchange with Indian legal tender of another denomination, excluding currency held for its numismatic value. So first here what they are trying to say, when it is used as a consideration to settle, when I use it as a consideration, that's money. Okay, so or I exchange it for another money, they are all treated as money itself. So it is all exchange of transactions is money. But when I exchange this transaction, say Indian currency I give and I get foreign currency, I give INR and I get USD. That is also a transaction money. But for that transaction, what charges he levies, that is a supply transaction because that's the use of money. So use of money is not money. Okay, for use of money, any additional charges which is levied, that is separate. On that, GST will be levied. So that's why when we do any foreign exchange transaction or foreign transactions, you'll see banker also will levy some charges. On that charges, they will levy GST, but not on the whole value of foreign transaction. Okay, so if I have done 1 lakh transaction, they will not levy GST on 1 lakh. On 1 lakh, they will levy some exchange charges. Okay, they will levy some commission charges. Say on 1 lakh rupees, they levy 1,000 rupees. On that 1,000, that is leviable to GST, on that GST will be levied. Okay, so when it is used as a consideration to settle an obligation or exchange with Indian legal tender of another denomination, that is all money, excluding currency held for its numismatic value. What is numismatic value? I have old coins, okay, or I have a valid 2,000 rupees note, but the number is unique. Now I'm holding it for its numismatic value and I sell that 2,000 rupees for say 5,000 rupees. So I cannot sell that's an exchange in money because the other person is not buying as an exchange tender. He's buying it for its numismatic value. Then that 5,000 itself is liable to GST because that's the consideration which I'm getting. Okay, so money when it is held for its numismatic value is not a money. It becomes a article or it becomes a product. Okay. Pay order and money order, yeah, pay order, money order, all of those are part of this itself. So there is a mention of pay order, money order over here. They are also money itself because money order is what we used to use in case of post, wherein I have to make payment to somebody. I'll go to the post office, I'll tell 500 rupees I've deposited, pay it to the other person. So physically the postman used to go and give that money to the person whom I have to pay. That's a money order and pay order. So that is also transaction in money. What is the difference between consideration and money? There's a lot of difference. Consideration is anything what I get in return. Okay. So there is something called as quid pro quo. Quid pro quo means whatever transaction I do, I'm doing it to get something. So when I sell a laptop, I'm getting back something. That is consideration. Now that getting something could be for 50,000 rupees or could be 20,000 rupees and 30,000 printer. So the consideration for the sale of the laptop is in first instance full 50,000 money. That is money because I've got. So consideration is on the top. One aspect of consideration is money. So I can sell something and I can get the consideration in money, or the consideration could be in non-money terms also. Say I could get in exchange of this laptop, I can get a printer. So the consideration, I've got it, right? I've got something in return. So there is consideration, but there is no money involved, right? The difference between money and consideration is money is one part of the consideration, but not all parts of the consideration. Now, consideration could be in money or in non-money, or it could be a mix of money and non-monetary terms. So another thing, what I was saying is sale of laptop. On this, I've got rupees 20,000 rupees, and I've got a printer. So printer plus that 20,000 rupees is the consideration for this laptop. Okay, so money is one of the part of consideration, not always the only part of consideration. Draft is a demand draft. Pay order is which is used in postal offices, right? Is bartered system which have money equivalent when time of exchange is considered as money. It is considered as a consideration, not as a money. So barter is also recognized as a exchange transaction. It is also one of the supply components. So the 8 components when we said in terms of supply, barter is also one of the aspects of supply. Google Pay, Paytm are also money, yes, because they are only modes through which make the transactions in money. So anything, these are all recognized by RBI. So that's the reason they are also money itself. Okay. Now related persons. Why related persons? So much emphasis is here. There could be some questions asked in terms of related person, saying who is a related person, because a transaction with related persons, if it is done, then the valuation rules will change. Generally, the valuation is done with the unrelated person. Okay, that person who is not related to you. Because if it is related, then your price will be influenced. Correct? If I sell something to my customer, will I sell the same thing to my brother? I might sell it or I might not sell it. So whenever there is a transaction with a related person, the normal valuations will not apply. Okay, that's why we need to understand who is a related person. Your questions could be framed in such a way that the relationship is given and you will have to determine whether he is a related person or no. If he is a related person, then you will tell that your valuation, normal valuation will not apply, special valuation will apply, right? Because as we had said earlier, we are doing a self-assessment model. In a self-assessment model, okay, the value is not the value what is decided by the government. You decide the value. Whatever value you sell. Suppose I am selling a fan. I'm a dealer of fan. My standard selling price is 5,000 rupees for this fan. Now, if I sell to a customer at 3,000 rupees, is it treated as a valuation? Yes, it is still treated as a valuation because you're giving it at a discount to an unrelated person. He is negotiating the price with you. So he is coming and negotiating and you have given him discount. That is still treated as a normal value. On that, GST has to be paid, not on 5,000. 5,000 is your standard rate, but 3,000 is the value what the customer has negotiated with you, and he is not a related person and other conditions are not being fulfilled. So you're selling it at a discounted price, that is permitted. But if I sell the same thing at 3,000 rupees itself to my related party, then there is some doubt, right? Generally, you sell 5,000, but why have you sold them at 3,000? That's the reason your valuation will change for a related person. So it is important to understand who is a related person. First is if such persons are officers or directors of one another's business. If there is an influence which is happening through one of these things, which is such persons, there are two persons, more than two persons also, such persons are officers or directors of one another's business. I am a director of his business, okay, and so I become a related person to other company. So I am a director of my company and I'm a director of another company also. Now, any transaction my company does with another company, it will be treated as a transaction with related person. So related person definition, the income tax is different. Under GST, it is different. Okay. So in terms of GST, such persons are officers or directors of another business. So I'm an officer of that company or I'm a director of another company. Then these two companies are related. Second is such persons are legally recognized partners in business. Okay. So it could be a partnership firm or a LLP also. Partners, recognized partners in business could be a LLP. Even in LLP, you have partners. So if they are common partners or one person is a partner in another business, then also they are related. Such persons are employer and employee of the company. So any transaction done between employer and employee are also considered as related persons. Okay. Any person directly or indirectly owns, controls or holds 25% or more of the outstanding voting stock or shares of the or both of them. So if one person holds more than 25%, so he's not a director, he's not an officer, he is not a recognized person, neither he's an employee, he's an investor. He's an investor who is invested more than 25% shares in the company. Either shares or voting rights. Voting stock would mean that when there is no share, okay, there could be a company which is not having share capital, then he's having a substantial hold through other modes. So voting stock or shares, okay, wherein that percentage of holding is more than 25%, okay, then also is treated as a related person. So if he's providing any services to him or he's taking any services from the company, then it will be treated as a related person's transaction. One of them directly or indirectly controls the other. When one of them are either directly, okay, or indirectly, I control the decision of the company. So I am not an investor or something like that, but I've given a loan to the company. If I've given a loan, I'll say that, okay, all these decisions has to be taken with respect to any sale transaction which you do or with any kind of operational matters are there, you have to take my approval. So he's controlling the other company. He is also a related person. Both of them are directly or indirectly controlled by a third person. There are two entities. So neither A is controlling B nor B is controlling A, but there is one C who is controlling both of these companies. C is an investor in both of these companies, then these two also becomes, how could the control be? The control be where he is holding more than 25%, which you have seen here. The control percentage applies here also, even though if it is not said, that is implied, saying that if anybody holds more than 25% in these two companies, then these two companies also become related person. Okay. Both of them are directly or indirectly controlled by a third person. So it could be direct control, it could be controlled through anybody else also. Okay, directly or indirectly controls the other person. Together, they directly and indirectly control a third person. So my example, A and B are there, both are not related, but C controls them. That was example point number 6. Now point number 7 says, when two companies are there and they both together control 25% of more in another company. That is, together they directly or indirectly control a third person, or they are members of the same family. So they are members of the same family are also treated as related persons. And the eighth clause is one of them sole agent, sole distributor, or sole concessionaire of the other, wherein I have appointed a sole agent or appointed a sole businessman or a sole distributor, saying that you can only sell goods. I will manufacture, I will give the goods to you. You are the sole selling agent for me. Okay. And all any buyers will buy from you. So this sole agent whom I've appointed and my company both are treated as related, because I will influence his decision and his decisions also will influence me. If he's a sole agent, sole distributor, or sole concessionaire, then also we are related persons. Okay, understood the related persons. Each of these terms are very important, because whenever we go into related persons, this will be very important for us. How to determine valuation of deemed supply under section 7.1c, deemed supply and para 3 of schedule 1 between principal and agent. That is what's given in the valuation rules, which is not relevant for you. So those will be decided under valuation rules. What is voting stock or share? Voting stock or share means any shares which gives you the voting right. So what are the shares which gives you voting right? Equity shares. Equity shares gives you the voting right. Preference shares gives you voting right? No, only in case of preferential matters. So they do not give you voting right. But there could be a differential shares which is being given, saying that preferential shares with voting rights. So they are also be treated as voting shares. So if I hold say 60% to preference shares and I'm not given voting rights, so then I'll not be treated as a related person, because I'm not having any decision of whatsoever. I'm just holding 60% without having a voting right. So I cannot be treated as a related person. Voting stock and shares means those shares where it gives me a voting right. So any decision of which is being taken care at the members, and I have a say in that. I have my voting right in that. That is treated as a share with voting shares or voting stock. One of them controls the other. Please repeat. One of them controls the other. When I control the other company for making major decisions. So it could be that a government is funding a company, it could be a government enterprise, and the government is not investing anything or things like that. Because of a statutory obligation, we have to appoint the government, one of the representative of the government. Now this government person will control many things, saying that what you can do, what you cannot do, because it's a government enterprise, right? So if such enterprise is there, and even if they are not given shares to anybody, if they have not given any directorship, but they have not taken any amount or something like that, but still the other one person controls the decision, then it will be treated as that one of them controls the other. If one person has a best friend and he sold the goods to him, then he is a related person. Whether he is falling under this question, definition of related person, he is not falling under any of the definition of related person. So even if it is best friend or anybody, what is presumed is, even if it is your best friend, you will not influence your price and sell it. If your price is influenced, then is what he will think whether it's a related person or no. He is not a related person. He's not related to you. You're not given him stock and things like that. Even if he's your best friend, it will be treated that you will not sell your business at loss. You will not sell your goods at loss. Okay. So in such cases, he will not be treated as a related person. Good question. There's some question asked by somebody, seeing that we are saying in this slide that together they indirectly and indirectly control a third person, or they are members of the same family. So what is the definition of family? Family definition is simple. Family means the spouse and children of the person. That is, if it's a husband, then his wife is a family. If it's a wife, then her husband is a family, spouse and children of the person, then parents, grandparents, brothers and sisters of the person if they are wholly or mainly dependent on the same person. Okay, first is spouse and children, whether they're dependent or independent, doesn't matter. Spouse and children are always a family. Then parents and grandparents, brothers and sisters. Parents, grandparents, and brothers and sisters of the person if they are wholly or mainly dependent on the main person. So if I am a person for whom you have to consider my family, then my parents, my grandparents, if they're staying independently and they're not dependent on me, then they are not treated as a family. But if the parents, grandparents, and brothers and sisters, these four category of people, if they are mainly dependent on me, then they are family. Okay, that's the definition of family. Is Reliance Future Group can be treated as related person? If Reliance has invested more than 25% in Future Group, then they can be treated as related. Okay. Now we'll go to the valuation. After understanding the various definitions which is relevant, we'll get into the value of taxable supply. This slide covers everything on value, the main sections on valuation. First is section 15 subsection when it says that transaction value is the value for the considering the supply. What is the value which you will consider for supply? Whatever is the transaction value. Transaction value means what? The price which is actually paid for the supply, which means if I raise an invoice for 1 lakh rupees, 1 lakh is the transaction value. For the same goods, if I raise a same goods for another customer, I raise 80,000, then 80,000 is the value. For the same goods for another customer, I raise 1,20,000 rupees, then 1,20,000 is the value. So whatever value at which I do a transaction is called as a transaction value. So the government will not come and see your price list. The price list are all commercial contracts, commercial nature, wherein you have a price list. But due to negotiation, due to contracts and due to arrangements, if you are selling at any price different for same goods, that is also permitted. Generally, we see FMCG goods. If I buy a soap, the price is same for me. If I buy a soap at different shop, it is also same for me. So those FMCG products, MRP is fixed. But for any goods, the value is not like a MRP for everything. The valuation is not MRP saying that government has given a MRP list, or they have not said that whatever is the MRP, that's the value. No, they've said transaction value. At what value you do a transaction, that is the transaction value. That is price actually paid or payable for the supply. Okay, which means paid or payable. Either you pay 10,000 rupees today and say pay 20,000 rupees tomorrow. Totally for this product, you're paying 30,000 rupees. That is the price. Now that price is decided upfront when you raise the invoice. When I raise the invoice, what is the price paid or payable is decided in the invoice. So whatever is the value I decided to sell to the customer is reported in the invoice. So either it is paid or payable. Now what happens? He doesn't pay. Still, it's a payable only for you. So the price what you enter with the customer, okay, is the transaction value. That will be the value for GST. Now, when is the sole consideration? When I sell something to an unrelated party. So we know the definition of related party. If I make any supply to related party, will I come here? No, I will not come here at all, because he is not a related party. Whether the price should be, even if the price is a sole consideration, I will not come here because he is a related party. If I do any transaction with related party, then section 15(1) will not apply. Transaction value should not be used. Then what should be the value which is to be used? That valuation rules will tell you. But you cannot just go with the transaction value. First condition is that it should be with a non-related person. So if I sell to an end customer who is not related to me, he's a regular customer, will the price be influenced? Even if he's a regular customer, the price could be reduced. You can give him discount. Still, you will not have undue influence on the price. You can reduce the price. You can give him more discount because of your relationship. That is fine. That is acceptable because that's a business nature, commercial nature, but you're not prone to collect less value so that you'll pay less taxes. The main intention of valuation is that the revenue to the government should come correctly. You should not cheat the government. That's the reason valuation rules are there. So if you're actually selling 1 lakh worth of goods yesterday, after 10 days, the same customer, if you're selling at 80,000 rupees, that is the value, no? Because you have sold it at a lower price because you want to have a greater business with him. So whatever value you have collected, on that you pay GST, don't pay anything more, is what the government is saying. Okay, so when it is a non-related party and price is the sole consideration, so both conditions has to be satisfied. You have to sell it to a non-related party and price should be the sole consideration. What do you mean by price should be the sole consideration? Selling him something and I am only selling it at a price and nothing else. Then it is be treated as a normal transaction. I can use the transaction value. So transaction value under section 15(1) is used when the transaction is between two persons who are not related to each other and price is the sole consideration for the supply. Then value of supply is the transaction value, which means the price actually paid or payable. Even if one of these conditions is not satisfied, say I make a transaction between unrelated person, but price is not the sole consideration, which means what? Price is not sole consideration means what? I will tell, okay, I will raise an invoice for 50,000 rupees. You pay me for this, but you have to pay me 10,000 also. You have to price, I mentioned 50,000 rupees. So you have to pay me 50,000 rupees and you also have to bring a kind of a new customer for me. So their price is not the sole consideration. He is obligated to do something else. Okay. So if there is some other obligation from the buyer that apart from paying the price, he has to pay me something else, then that is not the transaction value. Another example could be when I sold generally an apartment, okay, or a builder constructs a building and gives it to the contractor. Okay. Now contractor will do the work and he'll give the value. He'll give the work for me. Apart from construction for this, you have to provide me cement also. Okay. And I will tell you have to give me something else. Price is not the sole consideration. You have to give me something else. Then it is treated that price is not the sole consideration. Then you cannot go for transaction value. You have to go to valuation rules and determine other things. So generally what happens in valuation rules, what you'll see is, okay, what is the value of the price and what is the value of non-monetary consideration? Where price is not there, then you're getting something else. And what is the value of that? They will do a valuation of that, saying that if you're saying you have to give him cement also, then what is the price of the cement has to be added, that will be the value. So transaction value becomes very simple, saying that, okay, that is the value which is agreed, that is the value which is there in the invoice. But if that is not there, then the valuation rules will tell, okay, you have to add something to it and then pay GST. Doesn't mean that they have to go to the department every time when the transaction value is not a correct value. They will have to do some adjustment and then pay GST. Okay, that is the difference between transaction value and a non-transaction value. So if the principal agent relationship not covered as per para 3 of schedule 1 of section 7, will it be taxable or no? If the principal agent relationship is not covered under section 3, if it is covered under section 3, then there is outside GST because it has no supply. If it is outside section para 3 of schedule 1, okay, if it is not covered under para 3, if it is covered, then there is no consideration also, then it will be implied. If it is not there in schedule 1, okay, then it means there is a price. Schedule 1, when do we go? When we go that there is no consideration also, you will arrive at a consideration. Schedule 1 is for that when there is no consideration also, deemed consideration has to be applied, right? So in such cases, deemed valuation will apply. If it is outside the schedule 1, it means there is a consideration. But if the principal and agent are related, then it means they are related persons, right? Wherein one party influences the other. Then their principal and agent is influential thing. Then if the agent is buying something on, then that will be treated as a related party transaction. What do you mean by officers or directors of one another's business? Right? I am a officer in his company and he is officer in my company, or I am a director in his company and he is also a director in my company. Officers are directors of one other's business, wherein we have common directorship. I am a director in my company as well as his company. He is a director of his company as well as my company. So there we are directors of one another's business, then they are treated as related party. Price means cash or kind. Price can mean cash or kind both. They have not used money. And if they use money, it's fine. But price could be, price is the sole concept, saying that this is the value. Now you pay me in money or you pay me in non-monetary terms. But generally, price means money only. Because if it is non-monetary terms, then the valuation rules will define what you have to do. So generally, you should understand price means money itself. Okay, we'll go through further in terms of valuation. We'll just take a break of 10 minutes here and come back at 7:20. Before that itself, so around 7:20, we'll catch up. Price means the actual money what we pay. One director can be there in more than one company. Yes, a director can be there in more than one company. So the one director can be a director in at least in maximum 20 private limited companies. So that's permitted. So distinct person are those entities which have many branches and registered in different location, or which are located in different location but has same registration. No. Distinct person means those entities which have many branches and registered in different branches. So for each of these branches, if they have taken separate registration, then they are treated as a distinct entity. And if they have say many branches and one registration, then they are not treated as distinct person. Okay. So one state, another state is a distinct person. Within state, if two registrations is taken, then they are treated distinct person. In exchange, next question, in exchange of my old TV with new one and old TV replaced at 8,000 rupees. If I get a new TV, I give my old TV and I pay balance of 2,000 rupees. So for the price of the new TV is 10,000 rupees. I've given my old TV and I've given 2,000 rupees. Since I paid 2,000 rupees, here the transaction value is 2,000 rupees. Is that right? No, that's not right. That's why I said that when in our slide you'll see transaction value means the price actually paid and price is the sole consideration. Here price is not the sole consideration. When he sold me for 10,000 rupees, I'm giving him 2,000 rupees and I'm giving him something else. So price, money is not the sole consideration. That's a good example for the fit case of saying that price is not the sole consideration. So price is 2,000 rupees. If he sells me the TV at 10,000 rupees and I pay him 10,000 rupees, then 10,000 is the only price and price is the sole consideration. But in your example, 10,000 rupees worth of TV when I buy, price is not the sole consideration. I'm giving him price and I'm giving him something else. What am I giving up? I'm giving up a TV. So price is not sole consideration. So transaction value is not the value. So your 2,000 is not the transaction value. 10,000 is the value because he sold it at 10,000 and it's an exchange transaction wherein you're giving 2,000 and another TV. So you will not go with valuation rules. You will not go with this valuation section. You'll go with valuation rules. So the valuation rules will tell you what 2,000 rupees you take it. Plus take the value of the old TV. The price of the old TV is 8,000. So 8,000 plus 2,000. So 10,000 is the value for this. So your transaction value as per 15.1 will not apply here. You'll have to go to the rules. Rules will tell you that the value is 10,000 rupees. Clear, Mansa? Please answer my question. Nidhi Parikh. Nidhi Parikh. Sir, in TYK question 4, in study material question, I assume, in question number 4, in second point, the answer should be second, or in time of supply, question number 4. Okay, let me go to time of supply. In time of supply, question number 4, in second point, the answer should be 2nd August, but 1st August is given. Okay. Date of issue of invoice is June 1st. And date immediately following 60 days from the invoice is August 1st. Okay. Date of issue of invoice is June 1st. Date immediately following 60 days. June has 30 days, right? So June you will take 30 days minus 1, which is 29 days. July has how many days? 31 days. So plus 31 days. 31 plus 29 is how much? 60. So 60 days following that date will be August 1st only, no? So Nidhi, you have to consider actual dates. Okay, you'll have to consider actual dates. June has 30 days, July has 31 days. So you would have considered 30 plus 29 and then August 1. So that you would have told 60 plus 1, August 2nd. That's not correct. So it is June 29, July 31 days. 31 plus 29 makes it 60. 60 days following the 61st day, date immediately following 60 days, which is August 1st. So August 1st is correct there. Okay, hope you have understood. Consider July's 31 days and please reply if you have understood this. So for when goods are sent on approval basis, we have two criteria of invoice: before or at the time of supply. 6 months from the date of removal under sales on approval basis, and goods are sent after supply takes place. Then how we will determine time of supply? As said in first point, I want to ask what is the meaning of supply in first point. So when a supply is taken place, when the other person confirms. When the other person is not confirmed, there is no supply itself which is taken place. So in sale of approval basis, when the other person confirms only, it's a supply, right? Then in that case, when you raise the invoice, you have to raise the invoice within 6 months. So section 31 said that by when we should raise the invoice. So in case of sale and approval basis, we have to raise the invoice when the other person approves it. If he's not approved it, immediately following the 6 months period. Okay, either that or receipt of advance, whichever is earlier, right? So date of removal will not be relevant date, because date of removal means I've removed the goods, but not with the consent of the buyer. So that will not be treated as a removal, date of removal. Nidhi, clear with your question? Charu, in case of goods, payment criteria and invoice both are applicable for composition supply only. In case of goods, payment criteria and invoice both are applicable for composition supply only. Not clear with your question? Please clear that. We have two branches in different states. Then we have to take different registration both the states. Yes, if you have two branches in different states, then you have to take different registration. But if you want that other entity is not doing taxable transactions and things like that, you don't have to take. So you'll have clarity more when you go through the registration chapter. But yes, your question is correct. Whether we have to take two registration, generally yes. But if the other entity is within the threshold limit, then they don't have. Okay. Okay, we'll get on to this slide again where we had stopped it, saying that when you should use transaction value, you'll use the transaction value and the price is actually paid or payable for the supply. And the condition are only two conditions. If these two conditions are satisfied completely, not that just one condition, both the conditions have to be satisfied. If both conditions are satisfied, then you will treat it as a transaction value. That is when both the parties are not related and price is the sole consideration. In that cases, transaction value will be treated as the value for the supply of goods. Now, we have considered transaction value. After considering transaction value, there are few inclusions which we have to make. What are those inclusions? Duties and taxes other than GST if it is charged separately. Okay, there are some inclusions and some deductions we have to make. What inclusions we have to make? Duties and taxes other than GST if charged separately. So when I sell a goods, I charge GST. Now that GST is on the value, I don't have to add that again, right? So all CGST, SGST, IGST, GST compensation cess, these taxes are levied under the GST law. So these taxes are not to be added. So your transaction value is a pure transaction value. These taxes are not added. But if there is any other tax which we add, what could be the other taxes? Say I'm transporting a good and there is a toll tax. So I will add that toll tax to it. That will also become the transaction value. So in my invoice, I'll tell 10,000 is the value of the goods and the value of the toll comes to around 500 rupees. I'm adding that also. So should I pay GST on the tax again? Yes, you have to pay GST on that again, because what is to be included is inclusion is all duties and taxes other than GST is to be, which is charged separately, has to be added. So any municipal taxes I pay, is that to be added? Yes, that is also to be added. So any taxes what I add other than GST has to be added in the transaction value. Then what else is to be added? Interest, payment, late fees, penalty on delayed consideration. So any delayed consideration is there, that is also included in the value. Now, whether at the time of raising an invoice, I'll get to know what is the interest I'll charge. No, I don't know. I will charge later on, but it is related to the supply. So it is part of the transaction value. So it could be raised through the same invoice, or it could be raised later on also through a debit note. So anything which is added later on is also treated as a transaction value. So if the transaction value said that you have to add this, you could add this in the invoice if you know it at that point of time. If you don't know at that point of time, you can add it whenever you know, whenever it is determined. Like if the other party has not paid it within 15 days, my credit period was 15 days. Now he's not paid it, he's paid it after 30 days. So for the delay in the 15 days, I will add interest. So when I add interest, that has to be added through a debit note. Okay. So interest, late fees, penalty on delayed consideration, payment incurred by the recipient for which supplier is liable to payment incurred by the recipient. I am selling 1 lakh worth of goods. He is paying me consideration of 80,000 rupees. I will raise say 80,000 rupees invoice itself, and I will tell 20,000 you pay directly to my vendor. Somebody has supplied to me, I will pay him short. Okay, you pay to the vendor directly, but I will sell you worth goods of 1 lakh rupees only. So anything which is paid, okay, payment is the sole consideration, but instead of paying me, he's paid to somebody else on my behalf. So which payment incurred by the recipient for which supplier is liable to pay, for which I am supposed to pay, now he's paying directly, that value also has to be added. So all this is inclusion to the transaction value. Once we know that we are satisfied the conditions of 15.1 wherein transaction value is the value, there these things has to be added. Then any incidental expenses charged by the supplier at the time of supply before delivery. Any incidental charges, that also has to be added. Price linked subsidy other than which is given by the government. Okay, any price subsidy which is linked to the price means I am selling a geometry box for the schools. Okay, I'm a seller to the school, I'm selling geometry boxes. Now, one NGO comes and says me, you are supplying to the school, you are doing good work. Why instead of selling at 20 rupees, what you're selling now, sell them at 15 rupees, 5 rupees, I will compensate to you. Okay, you don't charge more to the school, you charge 15 rupees, 5 rupees each box, I will give it to you. So that is a subsidy which is linked to the price. Okay, so I will charge 15 to the school and 5 rupees I'm getting subsidy, that also has to be included. So 15 plus 5, 20 will be my transaction value. Okay, now if this subsidy is given by a government, then I don't have that, because government is permitted to give you subsidies. That will not be a transaction value. Then your transaction value will remain at 15 rupees. Okay. And any incidental expenses charged by the supplier at the time of delivery or before delivery. What could be the incidental expenses? Various expenses could be there. Say the customer says you have to do some testing, quality checking you have to do. After you do quality checking, only then I'll pay. So quality checking, whatever I do, and the charges levied by the lab or the institution which does the quality check. If they charge me something, that also I will include in the value. That has to be treated as an inclusion to the transaction value. Or say transportation charges, weighing charges, packaging charges, all of these are treated as incidental expenses. All of these incidental expenses are to be added. Okay. So we'll go through the slide where all it says what is to be added again. That 15.2 itself is depicted in a different way here, wherein other taxes, which means other than GST, any taxes which I levy, that is to be added. Any payment to third parties on my behalf, where the anything which the customer has to pay to me, instead of paying me, he pays to any third party on my behalf. Any incidental expenses, any interest, late fees and penalty, IPL, interest, late fees and penalty. We have discussed that also. This, we know that IPL, when is the time of payment? The time of payment for this is invoice, but for IPL, the time of payment is on actual receipt. Then if there is any price link subsidies, what is price link subsidies? We saw the example of geometry box. Apart from that, if there's any other subsidies, general subsidies which is given, saying that 1 lakh rupees we are giving you subsidy. Now it is not linked to the price, then it is not to be added. Okay, if they give a general subsidy, then it is not to be added. If it is a price link subsidy, only then it is to be added. and any subsidies given by the central government or state government is not to be included. Okay. Then these are the inclusions. Now, what are the exclusions? Pre-sale discounts. Okay. Any discounts which is given before the sale, or any invoice which is given before the sale, which is mentioned in the invoice, saying that, okay, 1 lakh rupees worth of sales, I'm giving you a discount. At the time of raising invoice itself, I know that I'm giving him a discount, then that has to be reduced. So pre-sale discounts, post-sale invoice linked discounts. So after sale, if I give any discount, but which is linked to the invoices. Okay, there are 2 conditions for this. If it's a post-sale invoice linked discount, which is agreed before the sale, saying that, okay, on achieving some targets, you will get some discount, but I cannot determine it now. So I'm not reducing for my invoice. It is predetermined today itself that I will give you some discount. Then that is to be reduced, but that has to be in link to the invoice, saying that against which invoice, how much discount I'm giving. Can't be that, okay, for all the transactions, one general thing. No, it should be linked to the invoice against which you're giving. So if it is a post-sale invoice linked discount, then that is to be reduced. So all this in reds is a reduction. These are all inclusions. So pre-sale discount, post-sale invoice linked discount, wherein if I give a discount, when I'm making a sale of 1 lakh rupees, the other person will get the credit on 1 lakh rupees. So if I reduce the value, I will raise a credit note, correct? So when I raise an invoice, when I make a sale transaction, I raise an invoice. When there's a reduction in value, what we had discussed last time, reduction value is through a credit note. So if I give any credit note for the reduction in value, then the reduction in value should be invoice linked. So he's taken the credit on that 1 lakh. When I'm reducing the value, that much credit that he has to reduce, correct? So if he has to, if there's a post-sale invoice, post-sale any kind of discounts I'm giving, I can give that through a credit note, and the recipient should reduce his input tax credit. Fine. That is the condition, saying that any post-sale invoice, it should be agreed prior to it, and the recipient should reduce the credit. Okay. Those are the conditions. So additions and exclusions. So we understood all the additions. So what are the relevance of these additions is, if anything I do as a part of a transaction, here the importance of composite supply and mixed supply will come. Not composition supply, not the scheme of composition scheme. I'm speaking on composite supply and mixed supply. What is a composite supply? A main supply, and there are other ancillary supplies. So the ancillary supplies will be form of the main supply itself, because in case of a composite supply, there are 2 or more supplies wherein one principal supply is involved, and the GST rate will be the rate of the principal component. So if I'm selling something and levying incidental expenses of packaging charges, so the GST rate on packaging charges will not be 18% as a general thing. If I'm selling goods of steel goods, I'm selling at 5%, then the packing charges also will be 5%, because that's the concept of composite supply. Okay, this is not a mixed supply. This is an example of a composite supply. Packing and this supply goes hand in hand. So this is a composite supply. The rate on the packaging also will be the same rate as on the main supply. So if I'm selling steel products at 5%, packaging also will be at 5%. If I'm selling some medical product at 12%, I am charging some packing charges. Then packing charges plus this has to be added and taxed at 12% itself. Okay, that's the relevance of inclusion in transaction value and the relevant GST rate. Now, what all reductions I have to do? Deductions of discount, any discount before or at the time of supply, then it is deductible. Any discount given after the supply, if it is agreed before the time of supply. So there has to be agreed, in the sense that it has to be agreed that discount will be given. How much discount, what is the value is not important. You can agree that, okay, I will give some percentage of the discount. Okay, if you agree that some percentage of discount is given, that is also considered as a agreed. So they're not saying agreed at the value. If it is agreed at the percentage, then it is deductible. If it is linked to the invoice, and ITC should be received by the reversed by the recipient. So twin conditions, it should be agreed. 3 conditions basically: any discount given after the supply, it should be agreed at or before the time of supply. Second is it is deductible if it should be invoice linked. First is it should be agreed before or at the time of supply. Second is it should be invoice linked. And third is ITC should be reversed by the recipient. If these three conditions are satisfied, then the discount is allowed. If not, if any of these three conditions are not satisfied, then, and if it is not agreed, then it is not deductible. Okay. Should one pay GST on loading, unloading, and local transportation of goods? Yes, GST is applicable on that also, because anything, whatever you do, incidental charges, that is to be added. So loading, unloading, or incidental things which you do, it has to be added. When it is said director to be independent director, then will it be a valid? Director being an employee in one company and another director, yes, he can be an employee in one company and he can be an independent director in another company, because in that other company is independent, but in this company he is a managing director. So in one company he can be a managing director taking employer-employee relationship as a salary, and in another company he can be an independent director. Will independent director also be a related party? Yes, if he is making any influence, if he is having any of those criteria of making any influence, then he will be treated as a related party, not otherwise. So generally independent directors will not be, because they cannot influence the decision of the company. They are acting on the board to give them suggestions and advices. So independent director generally will not be treated as a related party. Sir, but subsidy will reduce the prices. So why included in the value? Yes, subsidy is reduced in the prices, but to that extent, government is getting less funds, right? You are getting full value. You are getting from the customer part of the value. Other part of the customer you're getting as a subsidy. This NGO, that any other organization is giving it to you. So you are getting the full value for the sale. So if I'm selling, say, 50,000 rupees worth of a laptop, the government should get GST on that full 50,000 rupees. Now this 50,000 is split as 20,000 to the customer, and I'm getting a subsidy of 30,000 rupees. So you are getting benefit to the extra full 50,000 rupees. Then why you should not pay government full 50,000 rupees? That's way. So if you're getting anything from the government, is permitted. Okay, government is giving you, it's a genuine funding which is given. So on the government grants, don't pay GST. But if you're getting any subsidy from non-government entity, then you pay GST. What's credit note and debit note? Simple. We had explained this. Everybody is aware except few. What is a debit note? When I make sale of a transaction and there is some addition to be made to it, I will raise a debit note for increase in the value. So I've sold for 50,000 rupees. Now there is some inclusion I have to make. Like I said, incidental expenses and things like that. If I have not included in the invoice, I can include it through a debit note. Once I raise a debit note, that is also part of my transaction value itself. So that is increase in value, I will raise the debit note. If there's any reduction in value, some discounts I have to give, then that will be through a credit note. What about cash discount after sale? Cash discount after sale, when it is agreed, right? So after the sale, he agrees that I have agreed that I will give you a cash discount if you have made the payment on time of 15 days. So he's made the payment on 15 days. I will give him a cash discount. So this is a permitted transaction because it is linked to the invoice and this is agreed prior to raising the supply. So since it is linked to the invoice and it is agreed, so this criteria has been satisfied. Agreed at the time of supply that I'll give a discount. It is deductible and ITC should be reversed by the recipient. If these three conditions are satisfied, yes, it is satisfied, then cash discount is also permitted to be reduced. How ITC will be reversed by the recipient? What does it mean? When I make a sale, right, he takes the invoice and claims the credit. Now, how he claims the credit? Like that, he has to reverse the credit. So basically, in his GST returns, when he filed, he has to say that I have taken an invoice for 1 lakh rupees. I will take the credit, but then I've received a credit note. There is an option of credit note. This much is the credit note I've received. My input tax credit has to be reduced to that extent. So how the input tax system works? When I sell something, he gets the credit of it. Okay, he gets the credit of this. Then when I raise a credit note, he has to reduce that from his credit, from his input invoices, from his total input tax credit. Okay, once he reduces, it means that yes, he's satisfying the condition. Then whatever credit note I've raised, that is a correct credit note. Okay, it can be reduced from my sale value also. Subsidy is linked to price. What is the meaning of this price? Is this talking about basic profit margin, basic price profit margin? price. What is the sale price? So when it says subsidy is linked to the price, it means the sale price. It should be reduced from the sale price. Okay. Both debit notes and credit notes are raised by the supplier only. Yes. Both the credit notes and debit notes and credit notes in GST is raised by the supplier itself. If the customer raise anything, that will not be treated as a valid document for GST. So credit notes and debit notes are raised by the supplier only in GST regime. Okay. So if I have to enhance the value, I have to increase it. If I have to reduce the value, I have to decrease it, because from my action, the credit of the receiver is influenced. If he raises a debit note to me saying that you have to pay me something, and unless I raise a credit note, that will not reflect right in the GST portal. So the credit notes and debit notes in GST system is raised by the supplier itself. Okay. So we understood this. What are the additions and what are the deductions? Now there are specific queries in these. We will understand one by one. First is, what is this other taxes? We understood that any taxes other than GST which is included. We took some examples of municipal tax, toll tax and things. It is tax on tax. Yes, it is a tax on tax. So any other taxes, which is mentioned in the section itself, section 15.2, that any other taxes other than the GST taxes should be added. What's the question with respect to that? It says that any taxes, duties, cess, fees and charges levied under any law for the time being enforced other than this act should be added. So there was a question that there is something called as a TCS under income tax. What is TDS? We know that when I sell something, the other person deducts something and pays. So that is no question. But what is TCS? When I sell something for some value, I have to receive extra consideration from him. And that extra consideration has to be deposited to the tax department. So that's a concept of TCS. So tax deduction is deduction. Tax collection is when the seller has to collect. Okay. So under income tax, there is a provision of tax collected at source. So take a typical example of when a TCS is collected. I sell some scrap. Okay. Now the scrap dealer who buys it, he has to pay me for the scrap value which is agreed. So I've sold him old scrap of 10,000 rupees. He has to give me 10,000 rupees and he has to give me TCS value also, which means he has to give me say 5%. So on 10,000 rupees, 500 rupees is the thing. So he has to give me 10,500. So TCS is applicable on specified goods under income tax that has to be paid by the buyer. So the buyer has to pay me 10,000 rupees and he has to pay me this extra value of 5%, which is 500 rupees. So 10,500 rupees he has to give me. So on this 10,500, I pay, this 10,000 is my consideration, 500 I pay to the government. So the question was there that you said that any taxes other than GST has to be paid. Now this TCS is extra consideration. Will you charge GST on 10,500 was the question. So the government came up with a circular saying that this 500 what you're collecting as TCS is not includable as it is an interim levy not having the character of a tax. So this is not a tax. This is only collection on behalf of the customer and paid to the government. So this is only a payment made on behalf of the customer to the government. So this is an interim levy and it is not having the characteristics of the tax. Okay, interim levy is not part of this. What they have said to be included was only taxes, duties, cess, fees and charges. So since it's an interim levy not having the character of a tax, you don't have to add it. So TCS, which is charged on income tax, is not to be added. Clear? Then any amount that the supplier is liable to pay in relation to such supply but which has been incurred by the recipient of the supply and not included in the price actually paid or payable for the goods, which means cement which is bought by the recipient directly and given to the supplier. So I'm a supplier and he is a person who's constructing it. Now receiver, the cement is bought by the recipient directly and given to the supplier. So I will charge him that much less, right? So since I'm charging him that much less, that has to be added. Then incidental expenses includes commission and packaging, which is charged by the supplier to the recipient. Means any commission or any packaging charges, what I'm doing has to be included. Freight handling charges, inspection and certification charges, saying that, okay, you sell something to me, but you have to get it certified from a BIS authority. So when I do a certification from the BIS authority, they will charge me some charges. So that also has to be included. Anything which I do on behalf of the customer, okay, has to be included in my value. So whatever additions I do, like freight handling, in blanket subsidies are not included. Only subsidies directly linked to the price of the goods or services added. And then subsidy which is given by the state government and central government is not to be added. Only state government and central government is not to be added. Now, what are all the exclusions? Discounts given before or at the time of supply, if such discount has duly been recorded in the invoice issued, it should be recorded. That is also permitted. Discount, but in case of discount given after the supply is affected, it will be reduced only if such discount is established in terms of an agreement. So it can be an oral agreement or a written agreement, but it is agreement entered before the supply, entered into at or before the time of such supply, and is specifically linked to the relevant invoices. So if it is linked to the relevant invoices, first of all, it should be pre-agreed, it should be linked to the invoices, and input tax credit attributable to such discount on the basis of document issued by the supplier has been reversed by the recipient. So input tax credit on such credit note should be reversed by the recipient. Okay. Again, to explain this in a pictorial thing, discount given, is it at the time of supply? Yes. Is it shown in the invoice? Yes. Then discount is not included in the value of supply. Another instance, is it at the time of supply? Yes. Is it shown in the invoice? No. Then discount is not included. If it is before the supply, is it not? It is shown in the invoice. Again, same thing. Either discount is at the same time of supply or before the supply. Then if it is after the time of supply, after the supply, then in terms of an agreement that existed at the time of supply, is the discount given in terms of an agreement that existed at the time of supply, and it can be linked to the invoices and proportionate ITC is reversed by the recipient. If all the three are satisfied, then it is not included. If any of these three conditions are not satisfied, then discount is not included. Very clear, very simple to understand. These three conditions has to be there, right? If these three conditions are there, then discount is allowed. Now we'll take example of when all, okay, what kinds of discounts are there and what is allowed. Any questions before that? About cash discount after sale. Cash discount after sale also, it is generally agreed at the time of supply itself that we will give you a cash discount if you make prompt payment, and it is linked to the invoice. Then it is permitted discount. Then how ITC will be reversed by the recipient? It means that he will reverse that credit. Can you explain the meaning of linked with invoice? It means when I give a discount, I have raised 5 invoices in the year. Now, if I have to give a discount, I just cannot give 500 rupees discount just like that. I should give saying that for each invoice, how much is the discount I'm giving, which means for each transaction, what I have raised to an invoice, for each invoice, I should be able to assign saying that 100 rupees is for one invoice, 300 rupees is for two invoice, say second invoice, and another 100 rupees is for third invoice. So I should be knowing I'm giving this discount against which invoice, because while I'm reporting, I have to report the credit note, then I have to also report the invoice against which I'm giving. So I have to give a discount which is linked to the invoices. Okay, that is the condition. What do you mean by debit note? Debit note means a note which is given saying that I'm debiting your account. When I make a sale, also I debit the customer's account, right? Debit the debtors to sales account. But that's the sale entry, right? Debit the debtors and credit the sales. So when I'm giving a debit note, that also means that I'm debiting you again for the charges. So I'm debiting you again. That's the reason I'm raising a debit note. So understand the accounting entries. When I raise a debit note, I debit the customer and credit the extra charges, which is receivable, right? So when I debit the customer, it's a debit note. When I credit the customer, saying that I incurred some expenses, you pay me. So expenses are reduction in the value. And I reverse the sales, right? So sales to customer, I'm crediting the customer. That's a credit note which I raised. Okay. Credit note raised after 2 months. After 2 months, any interest paid? Gomati Sokar, please ask your question correctly. I'm not able to understand your question. There is TCS and TDS also in case of GST. What is it? TCS and TDS and GST is there, but they are all additional taxes which is to be paid. That when I make sale to e-commerce companies, they will make sale to any government companies, then they will deduct TDS and TCS. So that's a different concept than what we are discussing here. TCS is like advanced tax. No, TCS is not like an advanced tax. TCS is a tax paid on behalf of the customer. So for every transaction you pay TCS, but advanced tax you pay on a quarterly basis. TCS on scrap is 1% or 5%. And including GST amount or any value. TCS on scrap is 1% or 5%. Yes, it is 1% or 5%. And including GST amount on any value, no, on that GST is not levied. What is the meaning of interim levy? It means it's a levy which is paid by that person, but I'm levying now. So it is not in the nature of tax. It is a interval levy. So instead of paying taxes later on, I'm paying now. So it's only, that is the meaning of interim levy. Levy which is to be levied later on is being levied now, but it is not a tax which is collected. In your cement example, why the recipient will give cement to the supplier? So say take a transaction of a buyer and a seller. A buyer is buying some goods from the seller, saying that I will sell something to you. Say of the cement, I will construct a machinery and I will sell it to you. Now for this seller, when he sells this machinery, he needs a cement. Now buyer says, I have a cement, use my cement and give my product soon. So buyer gives him the cement. So he will tell, when you sell me, charge me some value for this machinery, reduce the value of cement back because I have already given to you. So I will reduce the value of the cement. So this cement value, what is paid by the buyer to the seller, has to be included. Otherwise, what will happen? The price will be reduced. Okay, 50% value of cement, I'll give you cement. Don't charge me GST on the cement because I've given it to you. That will not be correct, right? So whatever transaction in case of any cement example, anything done by the buyer on behalf of the seller has to be added. Okay, so anything what is done by the buyer on behalf of the seller has to be added there. Okay. So I've explained TCS and cement provision again. Rohini, please let me know if you understood the sample. Meaning of discount given before or at the time of supply and shown in the invoice. So discount is given before raising the invoice basically, and it should be mentioned in the invoice. At the time of supply or before the time of supply, it is agreed that I'll give you a discount. That is before doing the actual transaction. If it is discussed, then that means it is a discount is given before or at the time of supply. If we are not able to determine supply value, then what do we do? When will you not be able to determine the supply value? If you're selling something and if you're agreeing at a value, then you will note the value. If you're giving free of cost, if you're giving free, then there's no consideration, no GST, right? If there is a consideration, then you will know what is your consideration, at what value you're selling it. If you're not knowing, it means that what does it mean? You're not selling it, or you will decide the price later on. When will you do that? If you're selling it to a related party or somebody, or if you're selling it to end customer, you want the money today, right? Or at least you want to raise the invoice today. So you will know the value. Tell me any instance when you will not know the value. Very, very few cases. I don't find any cases when you're selling to a customer and you do not know the value. Is GST liable on scrap also? Yes, it is goods. Why not? In the exemptions, did we see any exemptions on goods? We have not discussed, but there is no exemption on scrap. So scrap also is goods itself. GST is applicable on scrap also. Section 15(2)(b) is a very good provision. It reduces the chances of manipulation made by the supplier. Yes, that's the reason 15(2)(b) is given. Okay. Now we'll see what is allowable as discounts and what all is not allowable. There could be various discounts. One is staggered discount, which means the rate of the discount increases with the increase in purchase value. So as and when my purchase value increases, so I'm saying, okay, 1 lakh rupees worth goods you buy, I'll give you 5% discount. 2 lakh rupees for goods you buy, the discount percentage only I'll increase. From 10%, I'll give you 15% discount. The more you buy, I'll give you more discount. So the rate of discount increases with increase in purchase volume. Okay, but it will be decided, or it will be mentioned in the invoice itself, or it will be decided later also. Today you buy 10,000, tomorrow you buy 20,000. Okay, no problem. So whatever, as and when you increase the volume of sales, your discount percentage will increase, right? I've agreed at it before itself. So such discounts are excluded to determine the value of supply, which means it can be reduced from the valuation. Whenever they mention that discounts are excluded, it means you can reduce it from your value. You can either reduce it from the invoice itself, or you could reduce it through a credit note. So whatever credit note or reduction is a procedure, but to determine the value, that is what we have to do. We have to determine what is the value. So if I sell him at 1 lakh rupees, and if I've sold him at 2 lakh, if he has bought worth of goods of 2 lakh rupees, and I'm giving him extra discount, whatever extra discount I'm giving, that is to be reduced from the value of the goods. What other discount can be given? Year-end or volume discount, which is offered by the supplier to their stockists generally, wherein discounts are passed by the suppliers through credit note, saying that year-end I will give you a discount based on the volume. If you bought 50 tons, then your percentage is 5%. If you bought between 5 tons to 10 tons, then your percentage is 7.5%. If you bought about 10 tons, then your percentage is 10%. So today I do not know how much you will buy. As and when I invoice, I'll get to know. So whenever the year end comes in, I will know whatever is the invoices he's raised, how much tons he's bought. Based on that, I'll give him a discount. Now I've agreed with him saying that if you give this value of sales, then I will give you a discount. So it is an agreement agreed before, and I can link to each and every invoice saying that for each invoices, okay, 7.5% I agreed. So each invoice is 7.5% I'll reduce. Now whatever discount I will give you, you have to reverse the credit. He will reverse it. So since all the 3 criteria are satisfied and discount is passed through a credit note, such discounts also are to be excluded from determine the value of supply. But all these 3 conditions has to be satisfied. That is, he should reverse the input tax credit, right? So all these discounts, we know that buy more, save more discounts are allowed as discount. Year-end and volume discounts are also allowed. Then we have something called as a secondary discount, which means discounts are not known at the time of supply. At the time of supply, I don't know how much discount I'll give you, and neither I'm giving any clarity, are offered after the supply is already over. Okay, wherein I do not know what discount I'll give, or after the discount, after the sale has happened, then I realize, okay, something I have to give him a discount. Okay, then which is not linked to the invoice, and basically it is not agreed at the time of supply. So such discounts are not to be excluded. So such discounts cannot be reduced. So how will the supplier give the discount to the other person? He will give the discount through a document called as a commercial credit note. So we have seen general credit note. There is another set of credit notes called as commercial credit note or financial credit note. So these commercial credit notes is issued on that GST cannot be reduced. So the buyer also will not get the benefit of this. From my sale value also I cannot reduce, right? So here it is not to be excluded. It means if I've sold 1 lakh rupees and I've given him discount of 15,000 rupees, 15,000 rupees later on, then this 15,000 need not be reduced from the sale value because I'm not satisfying the conditions of 15.3. Then GST will be paid on 1 lakh only. So transaction value is 1 lakh only. This 15,000 will be passed on to the person through a credit note. He will pay me the 85,000 rupees only, but GST he will pay me on full 1 lakh rupees, because to reduce from the sale value, to reduce from the transaction value, the discount conditions are not. If discount is not mentioned in the invoice, then also deduct from the value? Yes. Even if discount is not mentioned in the invoice, then also it's deducted from the value? Yes. Because we are satisfying the other conditions. The 15 the chart which I gave you, that gave you clear-cut details saying that even if discount is given after the supply, in these 3 conditions are satisfied, and if these 3 conditions are satisfied, then it is not included in the value of supply. Please answer my query in notification given in case of time of supply of goods. There it is given that composition supplier is an exception. That means that payment criteria will be applicable for composition supplier. Yes. In that case, composition supplier, in that notification, it's given only for other than composition supplier. So for composition supplier, that exception will not apply. It means on receipt of advance also he has to pay GST. Correct, sir. I have referred subsection 4 of this section when supply value not to be determined as per this rule. What is meant by this asks? So subsection 4, we'll go to 15.4, then I'll make you understand what is 15.4. Just the next slide, saying that when we should go for 15.4. Okay, we'll take it up now. When the value of the supply on goods or services cannot be determined under subsection 1, the same shall be determined in such manner as may be prescribed. So 15.4 says that when we cannot determine the value under 15.1, 15.2 or 15.3, which means when the 15.1 is basically when it is unrelated persons, then the same shall be determined through rules. Or if it is through a related person, unrelated person where but price is not the sole consideration, then we'll have to again go to rules. Or if 15.3 conditions are not satisfied, then we will go to the rules. So when any of these conditions determine, no, only one. So only if it is between an unrelated, if it is between a related person and price is a sole consideration, when we'll go for this. Otherwise, if any of these two conditions are not satisfied, then we'll go to the rules. Okay. Notwithstanding anything contains subsection 1 or subsection 4, the value of such supplies as may be notified by the government on the request shall be determined in such manner. So the government has the powers to determine what will be the price in such special circumstances, and valuation rules will not apply. So they're giving the authority saying that in special circumstances when they want, they can say that this transaction, this will be the value. So that power is given to them. So basically 15.4 says what? You can go to the valuation rules. When will you go to the valuation rules? When the supply is not covered under section 15.1. That is, those two control conditions are not satisfied. Those two control conditions are, they are selling to an unrelated person and price is the sole consideration. So if I'm selling it to a related person and price is not the sole consideration, right? Then I cannot go for valuation under this valuation section. I have to go to rules. Or if I'm selling it to unrelated person but price is the sole consideration, still even if price is the sole consideration and I'm selling it to a related person, I will go to the valuation rules. That is, supply is covered under section 15.1 but transaction is between related persons, or supply is covered under section 15.1 but mandatory adjustment to transaction value is not made. So whatever adjustments which you have said, if those things are not made, then also we'll go to valuation rules. Okay, so you understood that 15.4 query. Staggered discount is nothing but as the quantity of purchase increases, the rate of discount also increases and vice versa. Correct, that's right. What is the difference between staggered discount and volume discount? Staggered discount is rate. So if you made sales from me to the extent of first criteria, say up to 50,000 sales, then I will give you 5%. If I made 1 lakh sales, then I'll give you 7.5%. So based on the per quantity of value of purchases you have made, I'll give you a discount. That is an example of year-end or periodic discount. What about transaction value for RCM in case of discount after supply? There also same thing. If the supply is made, I'll pay reverse charge on that. If debit saying that there is a discount which I'll give you for 15,000, if it's given me a credit note of 15,000 rupees, then in the GST what I have to pay under this month on reverse charge for some other thing, then I will reduce 15,000 to that extent and then pay. So same valuation rules says value has to be reduced 1 lakh minus 15,000. I will end up paying GST only on the 85,000 value itself. Okay. Staggered discounts are excluded to determine the value of supply. Yes, it means you have to reduce it. To exclude determine the value of supply means that is not the value of the transaction. Fine. So staggered discounts are excluded to determine the value of supply, which means they are reduced from your value. Rules are there in module? No, rules are not there in the module because it is not relevant for you. Rules are there in the final, not in inter modules. Valuation rules can also be applicable on one section 15.4, only on 15.4. Yes, 15.4 says that when sub 15.1 doesn't apply, then you have to go to the valuation rules. Okay. Somebody is asking me a question on question number 4 of value of supply. So we'll just go through the question. It's a big question. Let us furniture wala. Okay, share the screen. Furniture wala is a chain of retail showrooms selling both modern and classic furniture. In order to build strong customer association, the showroom provides free delivery of the furniture at the premises of the customer. If the distance between showroom and customer's premises is up to 20 kilometers, where the distance more than 20 kilometers, the showroom charges a concessional rate of rupees 10 per each additional kilometer. Okay, so they're charging additional kilometers. Miss Leena Kapoor purchased a double bed, a dressing table, and a center table, 2 lakh rupees from furniture owner. Mrs. Leena gets free delivery of the furniture and expenditure of 1,000 rupees for delivering the furniture. So, firstly, what is my consideration? My consideration is 2 lakh rupees, and I'm doing free delivery because the delivery is within 20 kilometers. But, anyways, I am incurring 1,000 rupees. So, what is the value of the taxable supply made by Furniture Mana? Will your answer change if the residence of Leena is 50 kilometers away? First is, what is the taxable value? I have sold for 2 lakh rupees. I have not collected anything. So my value is only 2 lakh. Whether I have incurred, that is my cost, because I have a policy that I will give delivery free of charge. So for 2 lakh rupees is my value, right? Because it is within 20 kilometers. Now, if the showroom is more than 50 kilometers away, and have I collected anything from him? If I have not collected anything, then it's fine. But if I've collected, but I have a policy, right? And the distance is more than 20 kilometers, the showroom charges a concessional freight of 10 rupees for every additional kilometers, which means 30 into 10, right? 3,000 rupees, 300 rupees I will collect from her. So then my value will be 2 lakh plus 300 rupees. So in second scenario, it will be 2 lakh 300. In first scenario, it will be 2 lakh rupees. Clear? Whatever expenses you incur, that will be irrelevant, because what you collect, transaction value, is what you collect from your customer. That is important. Okay. Clear? Who was asking this? Pandava Gayatri, is your query cleared now? 15.5 don't understand, please understand once again. 15.5 says the government has been given powers to determine that irrespective of what is mentioned in 15.1 and 15.4, you have to ignore, and the value what government says you have to take up in special circumstances. So government has been given power to take up special circumstances. Is my voice clear now? Seeing that many people are complaining that voice is not clear. Yeah. Okay. Sir, if I take a discount, then why we should claim ITC under reverse charge? No, if I take discount, then we claim ITC. We have to reduce the ITC, and it is not under reverse charge. If an entity has 2 branches in different states, in one state it is going only exempt supply, then it can take registration in one state. Is it correct? Yes. If it is doing only exempt supply, then it can take registration only one state. In that case, both branches will be distinct persons. Yeah, even in that case, even if it is not registered, if they are under different states, they will be treated as distinct persons only. Okay. You can keep asking your questions. I will go through the MCQs now. So we'll understand the MCQ through MCQs now. Okay. The value of supply shall not include any discount. Okay, the value of supply shall not include any discount which is given before the time of supply if such discount has been duly recorded in the invoice issued in respect of such supply, or is it B, at the time of supply if such discount has been duly recorded in the invoice issued in respect of such supply, or is it C, both A and B, or is it D, none of the above? What is transit insurance? When I move the goods from my place to the customer place, there is a transit, right? It is not reaching the customer immediately. For this transit, if there is any loss which happens or if there is any damage to the goods, that has to be insured, which is called as transit insurance. If GST is paid under reverse charge and then afterwards discount is given, then also GST has to be paid on the net value itself, right? So it has to be paid on the net value. So I pay GST and reverse charge now, and next month I have to pay that much less taxes. What is the answer for question number 1? Okay, there's a confused view. Few people are saying none of the above, which is an incorrect answer. Most of you have given a correct answer, which is C, which is both are correct. What has to be excluded will be both, which is given before the time of supply, if such discount has been recorded in the invoice, and at the time of supply, if such discounted has been duly recorded in the invoice. So in both the cases, before or at the time of supply, if it is duly recorded in the invoice, then that should not include any discount. So that should not be included. So correct answer is C. Most of you, Mansa, Preksha, Jay, Sushil Kumar, Hiral, Namrata, Pooja Gajjar. Pooja Gajjar, you have given a wrong answer. Rohini, Onkar Simran, most of you have given a correct answer. So answer is C. So it is a twisted question, shall not include any discount, and they've said what are the conditions. So if these conditions are satisfied, then discount is to be allowed and it has to be reduced from the value. Second question, in which circumstances subsection 4 and 5 of section 15 read with chapter 4 determination of value of supply applies? So in what are the situations when 15, 4 and 5 will come into, or basically when will you go to valuation rules? When a supply is made solely for non-monetary consideration, supply is made for part monetary and part non-monetary consideration, or when supply is made to related person, or in all these situations will you go to valuation rules? Good. Kadisiri, Asra, Wasim, Tanu, all of you have given correct answers. Bhargavi. Few people are saying 1A and 1D, which is not correct. 1C is the correct answer. Okay. Question number D. Question number 2. What is the answer? What is the benefit of discount when we have to reverse the credit of GST? Benefit of discount is, from the seller's perspective, he will reduce his value so he can pay less tax. From the recipient perspective, you have to be fair, right? Since you are a supplier, your taxes is reduced. So other person should not get the ultimate benefit. So if I've sold him for what value, he should claim credit only for that. And if my value is reduced, then his credit also should be reduced to that extent, right? So you cannot expect that you pay less taxes and he gets full credit. You reduce your output tax, he will reduce his input tax. Okay, that's why the effect is given there. So 2, what is the answer? Supply is made to related persons only. Only in such cases, you will go to valuation rules. Most of you are saying 2C. You are all confused. It's only basically both A and B. My question here is a mistake, but basically it is A and B in both these, in all the 3 cases, not only in C cases, sorry. In all the 3 instances, you will go to valuation rule, because when the supply is made for a non-monetary consideration, where price is not, non-monetary means what? Price is not the sole consideration. When the supply is made for non-monetary consideration, or it is made partly for monetary consideration, partly for non-monetary consideration. What does the condition I said? Price should be the sole consideration. It should be between unrelated persons. So here, these 2 criteria are correct, right? So in these 2 cases also, you'll go to valuation. And when you make to a related person also, you'll go to the valuation. So the correct answer is 2D. So very few people have given answer to this. Jay Gandhi, Ankita, Tandin Shevang, Sharing Dorji, Nidhi Parikh, and Pooja Gajjar has given a correct answer. Please explain first option of question 2. First option of question 2 is when the supply is made for non-monetary consideration, which is other than money. If there is anything other than the price, when the price is not the sole consideration. Non-monetary consideration means price is not the sole consideration. So if price is not the sole consideration, then will you go to the section 1 and you'll go section 15.1 and you'll go for the transaction value? No, you will still go to the valuation rules. When will you go under transaction value? When you are selling to unrelated person and price is the sole consideration. Okay. Now we'll go to the next question. Person including legal persons are deemed as related person when a third person controls or owns less than 25% voting rights, voting stock or shares of both of them, or if the third person controls directly and indirectly or owns or holds more than 25% voting shares, a third person controls or owns more than 50% voting shares, or if the third person controls directly or indirectly or holds less than 50% voting shares. Which one is this correct? Which of these is the correct answer? When a GTA is not registered, how will we raise credit note for discount later on? GTA will raise an invoice, right? So later on, if there's a reduction also, Siddharth, your question, Siddharth, when a GTA supplies something, he will raise an invoice. That's how you will pay him, correct? It cannot be a tax invoice, but a normal invoice. So if he's giving you an invoice, then he will give you a commercial credit note also, because on that GST he'll not charge, but a financial credit note he will give. So whatever is the reduction in value, based on that, you will pay the taxes less to that extent. 3 answer is, most of you, everybody actually have given the correct answer. Good. So you've been attentive in understanding the related party, because that was a very confusing slide. But yes, the answer is B. When a third party controls directly or indirectly more than, equal to, or more than 25% voting shares, then it will be treated as a related persons. Good. Everybody has given the correct answer. Everyone. Value of supply includes subsidies provided by the central government, subsidies directly linked to the price, or blanket subsidies, or both A and C. Answer to question number 4. Okay, I've slowly started receiving it. What is the answer for question number 3? Question number 3, the answer is B, wherein holds more than 25%. 3 is B. Now 4. 4 mixed answers. Somebody is saying D, few people are saying D, but 4, the answer is B. Value of supply includes subsidies which is directly linked to the price. Blanket subsidies are not included. Subsidies given by the central government is not included. Of course, both A and C will not come. So answer to question number 4 is subsidies directly linked to the price. Okay. Let's see here who all are given the answers. Rohini, Gadisiri, Sandeep Sandhu, Hiral Thakkar, Mrs. Charu, Asra Wasim Ahmed, Siddharth Mudalyar, Venkatakrishnan. Venkatakrishnan has given correct answer. Namrata Sarve, Onkar Simran, Harsh Goyal, Ganapati Nandagopal. You have given for answer 3, but it's question number 4. Nidhi Parekh, Tannu, Akanksha Pandey, Pooja Gajjar, Nitin P, Arnav Sadhu Khan, Dorji Funso, Khushi Kankari, Siddhant Garg, Jay Gandhi. What is blanket subsidy? Blanket subsidy means a subsidy which is given without any specific mention that it should be for each price. So any subsidy which is not linked to the price, just given as a thing that, okay, you use it. Now, whether you reduce your cost or something, that doesn't matter. Just a subsidy which is given, which is not linked to the price, is a blanket subsidy, which you can use either for reducing your cost, reducing a sale price, okay, or you could reduce your purchase price. Whichever way you can use it is a blanket subsidy. Okay, next question. Value of supply is the transaction value when a transaction of supply of goods or services made between unrelated persons, when price or when it is a price is a sole consideration, or is it both A and B, or when price is made with related persons but adjusted to match with unrelated party transaction. It's made to a related person, but the price is adjusted so that it is in line with the unrelated party transaction. Question number 5. Most of you should be giving correct answers here. Yes, I don't expect any wrong answers. One person has said 5D. Price is made with related persons but adjusted to match. No, even if it is adjusted to match and you have given a price, the adjustment you'll have to go to rules. You cannot use the transaction value. Transaction value you have to use only if both of these conditions are satisfied. If you're made to related persons and done some adjustment saying that no, I've done a correct thing, no, it is not permitted. Even if you're made to a related person with adjustment, it is not permitted. You have to go to valuation rules. Transaction value you can use only in case of where A and B is made. So correct answer is 5C. Next question. Discounts are excluded from value under section 15.2 when it is given before the time of supply, at the time of supply, recorded in the invoice, or all the above. Okay, so I'll not be repeating the name of the students who are giving correct answers. Most of you all are giving correct answers, and a few of them are giving same answer repeatedly. Just mention your answer once. They are reaching me, not to worry. So just tell me what is the answer. Question number C. You're giving C. C is not the answer. The answer is D, all of the above, because discounts are excluded. It is given before the time of supply, it is at the time of supply, and it should be recorded. Yeah, as a twin condition, it should be there, but yes, but all the conditions are satisfied. So, sixth, the answer is D. It should be before the time of supply, it can be at the time of supply, it should be recorded in the invoice. Also, all the conditions are there. It's question number 7. So, answer number 6, answer for question number 6 is D. Now, question number 7, which of the following discounts which is offered by the supplier are allowed as a reduction in the transaction value? Staggered discount, periodic year-end discounts or volume discounts, secondary discounts, or discounts given through commercial credit notes. Now, let me tell you, this is a tricky thing because there are two answers for this. So there's not one answer, there are two answers for this. Correct. Preksha, correct. And you amended your answer. For 6th, the answer is D. Yes, all conditions should be satisfied. For question number 7, B and C. Only A. If you are saying only C, if you are saying only B, there are two answers. Generally, in your CA question paper, you will not have two answers, but I have given here a question which has two answers. So what is to be excluded from a value of supply is staggered discount, because as and when you buy more, you will get more. So that is permitted. And periodic year-end discount, of course, subject to the condition that there should be an agreement at the time of supply itself. Secondary discounts, which means a discount which is given later on but is not agreed at the time of supply, is not permitted. So this is not given. And also discounts given through commercial credit notes. Okay, anything given through commercial credit notes is not to be reduced. So these two are not the answer. The answer is A and B. Some people have given correct answers. Some people have said A, B, and D. No. A and B is the answer. It is not A and D. No, you didn't understand the difference between all of this. Staggered discount, we had discussed. Staggered discount means you buy more, you'll get more discount. Year-end discount means you send in the volume. I'll know the volume, I'll give you a discount. That is year-end discount. Secondary discount means discount which is not linked, and discount which is given just as a random thing later on. After supplying, I realize that I have to give you a discount. So that is all example of secondary discount. So on secondary discount, I don't have to reduce, and discount which is given not also, I cannot reduce it. So answer is A and B. Question number 8, for the purpose of determination of value of supply under GST, TCS under provision of the income tax is what? Is it includable? Is it not includable in the taxable value for the purpose of GST, or there's no TCS concept under GST, or none of them? This is a very clear-cut answer. Discount given through commercial credit note. Kushi, yes, unique banega CA. Very good. Discount given through commercial credit note means it's a credit note which is given. Generally, a credit note means a credit note which is given for which I can reduce my sale value, and through that credit note, the receiver can reduce the credit. But a commercial credit note means I'm giving you a discount, but it is not relevant for GST because I'm not satisfied the conditions of reduction in value under GST. So I want to give you reduction, but the benefit of GST I will not get. So I'll just give you a credit note, which will be called as a commercial credit note or a financial credit note. Normal credit note means a credit note wherein I can use that to reduce my taxes and you have to reduce the input tax credit as a receiver. But the commercial credit note means my value will be reduced, but GST will not have impact. D, somebody is saying D. No. D is not the answer. TCS, we had discussed that the answer is B, which is not includable because TCS is an interim levy, so it is not having the character of the tax. So on that, GST is that under the provision of income tax, TCS is not includable. So TCS is not includable in the taxable value. Okay, correct answer is B. Question number 9. In which of the following circumstances outward freight and transit insurance will not be included in the value of supply of goods? Okay, which of the following outward freight and transit insurance will not be included? Supplier agrees to deliver the goods at the buyer's premises and arranges for transport and insurance. The contract of supply becomes a composite supply. Contract for supply is an ex-factory basis when the buyer pays the outward freight and insurance, neither A nor B, both A and B. So, in which of the following circumstances, this is again a valuation of additional consideration. When I say outward freight and transit insurance will not be included, in which of these cases these will not be included? So I'm not able to differentiate between staggered and volume and discount. Staggered discount means it's given at the upfront itself, at the time of raising invoice itself, you're giving a discount, that is staggered discount. Volume year-end discount means a discount which is given at the end of a year. Okay, so staggered discount is given immediately at the time of raising invoice. Volume year-end discount is given at the year-end. TCS excluded from GST, correct. Question number 9. The answer is B. Why? Because in the contract for supply as an ex-factory basis, which means I will supply the goods to you at my factory gate, and all the transportation and transit insurance and freight has to be taken care by the buyer. Okay, the buyer pays for it, which means it's an ex-factory base. Even if he pays for it, he pays on his own record, but I am not a person who is responsible for taking care of it. So any outward freight and transit insurance will be included only if I agree that I will supply the goods at your place, at the customer's location. Ex-factory basis means the price is agreed at my factory gate. Any additional things has to be incurred at the buyer's end, not my responsibility. So those are not to be included. Okay, so not to be included in the transaction value. So correct answer for 9 is B, not C nor A. So Sunil, your answer is correct. 9B is the correct answer. Last question for the day. Which of the following, which are the conditions to be satisfied to allow post-supply discount as deduction from the value of supply? Discount is in terms of an agreement that existed at the time of supply and can be worked out invoice-wise. Proportionate input tax credit is reversed by the recipient, neither A nor B or both A and B. Simple question at the end, not trouble you too much. Easiest question. Okay, with this question, we'll wrap up the session today, and tomorrow we'll start a discussion on input tax credit. It's a Sunday. I think it is intentionally kept Sunday morning so that you can read through, understand the question on input tax credit and relax. Then we'll have alternative days. Input tax credit is the heart of the GST. So you should attend the topic on input tax credit. If you don't attend the first class, then you'll not be able to understand the subsequent classes. Input tax credit, we have 3 classes. So be prompt and attend those classes. Correct. So 10, the answer most of you have given correctly. Arnav Sadukhan, Mansha, Siddhant Mudalyar, Asha Wasim Ahmed, Harsh Goyal, Siddhant Garg, Rekha Kumari, your question answer is wrong. Sandeep Sandhu, Gadi Siri, Charu, thank you very much. The answer is D. What are the conditions to be satisfied? Both A and B has to be satisfied. Discount is in terms of agreement at the existent time of supply, can be worked out invoice wise, and proportionate input tax credit is revealed. If both of these 2 conditions are satisfied, then only supply discount is permitted. Post supply discount is permitted. Okay. So answer for last question is last option. 10 is D. Answer is D. Both A. No. Only D. Only D. Which means both A and B. Yes. Yes. So answer for question number 10 is D. Okay, thank you very much. Thank you very much again. Been a good session till now. We'll study on the input tax credit tomorrow. Most of your questions on time and value of supply has been answered, so I don't anticipate any more questions. We'll just wait for last 1 minute. Thank you very much. Yes, good. So in 9th question, we can also answer B as in the option it is mentioned as composite supply, and in composite supply, both supplies are involved, and the question asking for not including freight, correct. So it cannot, it is answer is B. Answer is B only for 9th question. Yes. Ms. Charu, the answer for question number 9 is B itself. Okay, thank you very much. Let's catch up again tomorrow. Yes, sir, concluded.